Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
I don't see it.
Frank, it's passed us like 4 times by now.
I really shouldn't be trading right now.
Frank, you're trading? We're on the beach. How are you even trading? Is that your laptop?
No, it's my phone.
Oh.
We got the mobile version now, remember that?
Oh, that's right. It's fine.
Attention, A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker, Eightcap, is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, good morning. Welcome back to another live stream. Hope you're doing well. I gotta, hold on. Let me unmute. Can we unmute my sound really quick? I got some soundboard stuff that I've been playing with. Check it out. First of all, I'll play the intro. Good morning, everybody. Hope you're doing well. Happy Friday to you. Lots of stuff going on. We got gold selling off. I'm out of the gold trade. I am actually very light on positioning today, which is actually kind of a fun spot to be in. It's been a minute since I've not had a lot of trades on, and kind of a fresh slate. We've had a really, really good couple months, and I don't have a lot of current positions on. I do still have the TLT trade. Right now, the dollar index is actually bouncing pretty decisively. Looks like maybe a little bit of a fake out move here. We see the dollar index crossed under 104 and then bounced back. So a little bit of strength come in on the US dollar here this morning. I trailed out of a couple things, and I also got stopped out on one of my trades, the Australian dollar, and I'm actually looking at this one as a possible second attempt. So I actually like this trade a lot. So we took a 4-hour trade. Now I'm going to look at this daily chart level, which was the one that I wanted a little bit more anyways, to be honest. I put up in the Discord that I was watching for this pullback. By the way, if you guys would like to join the Discord channel, we'll drop the link to apply to join the Discord. It is free to join. There is a paid version. There's also a free version. So if you'd like the free version, apply to our Discord here. We'll drop the link here in the chat right now. Okay, so here's the thing. The Australian dollar pulling back. I got to check that it's still a setup on the EDGEFINDER. It's not. We're getting a neutral reading here. Let's see. What did it lose? It lost the trend. It lost the uptrend momentum that it was showing. So Australian dollar might not actually be a setup for me today. I thought it was, but neutral reading. So no go for me. It was a bullish reading. I took my first attempt. Looks like that'll be my last attempt for now on the Australian dollar, but I'll keep an eye on that one. Let's see. On the bearish side, we have some yen crosses, and that's about it. CAD Swiss, but I don't really trade. Usually I trade dollar crosses only anyways, just because if I'm going to trade FX, I like to trade the most, the most liquid stuff, the USD pairs. I also feel like I have the best, for me personally, the best knowledge base on what's happening in the US. Okay, so I'm still holding tight to the TLT position that I'm in. Treasury bonds are still getting a generally positive reading on the EDGEFINDER. The Dow Jones also might be a setup. Bitcoin might be a setup. S&P might be a setup. NASDAQ, Russell. We have a lot of stuff to go through today. We have no shortage of charts to look at, of things that I'm personally looking for possible setups on. I'm going to just go down the line. So I am bullish on the S&P 500, but would like a little bit more. If we do see another push lower, I'd like to take a stab at the S&P 500. If we take a look at the NASDAQ, same thing here. I almost took an entry yesterday, but didn't quite get the setup. I'm liking this rejection that we're seeing on the NAS. So if you take a look at NAS, big sell-off here, but coming up into some support. It seems like around the 19.5 level. So I may enter a trade on this one. I'll keep an eye on that. I like NAS to the upside. I like the risk to reward here. And when I say I like NAS to the upside, you have to remember, people might say like, "Oh, Nick, you're buying this market is high or it's expensive." Well, yes, but I'm trading it. I'm not necessarily investing here, right? If it was investing, I'm looking for better value. I'm looking for something that I could really. I don't love the idea of right now personally of investing a lot of stocks. I haven't been buying individual stocks in a hot minute. Good portion of that is because I think generally speaking, the market is a little bit expensive, but it doesn't matter so here's the thing. If you are somebody who believes the market is expensive and you should not touch buys whatsoever, you may be in the PE camp, right? The price to earnings of this market is no question relative to historical averages expensive. But here's the issue. Here's where I draw some problems with this argument of, well, look, the PE ratios are high, so you want to be you don't want to be buying this market. So this is an example of somebody who, from an investing standpoint, I hear you. From an investing standpoint, long term, I think you probably get better returns if you wait for PEs to be lower. But from a trading perspective, this is not healthy, healthy. It's not useful for timing. Okay. Price to earnings historically is a very poor timing mechanism, because just when you think the market is expensive, it can proceed for 3 months more, or 6 months more, 12 months, or 24 months to get more expensive than it already is. So PE ratios being high right now, in my opinion, is not a good case for bearishness. Now, is it something to be a little alert of? Absolutely, right? If markets are, saying, okay, look, we're expensive here. Okay, expensive can stay expensive for a long time, right? When something is the trend, when something is fashionable, it can stay in fashion, in popularity for some time. So as we pull back on the NASDAQ, right now, I don't see a massive bearish catalyst on the fundamental front that gets us to see just massive tanking from here. Could we see deeper pullback? Absolutely, we could. I actually put out a tweet yesterday on a little bit of an update on my campaign. If you're watching on Twitter, shout out to you guys. We're gonna say hello. Twitter people, Twitter. There's 46 people watching on Twitter right now. So hello to my Twitter friends. If you're not following me on Twitter, it's TraderNickFX. You can also find our company where we put out tons of different analysis posts at A1Trading_, I believe. Check this out. So I put this little tweet together yesterday. And let's go through this together. So I just said, remember, in a healthy bull market, there are often several 5 to 10% pullbacks. So a lot of people, this has been my warning here for months now. People get used to the environment they're in and they think it's never going to change. What we're seeing on the NASDAQ front is absolutely normal. In fact, it's so normal that people think it's weird going on. Like they're like, oh my gosh, the NASDAQ is selling so hard. No, this is normal behavior. We've just gotten used to abnormal behavior, which is where the market just screams higher and it never pulls back, right? People have gotten used to that. So they will start to think that that's how it always is, but it certainly is not the norm. If you take a look at the weekly on the NASDAQ, usually there are, periodic bear kind of movements that happen even in bull market cycles. But recently we've had such a clean upward trend that people are caught by surprise when it does actually start to pull back and do normal market things. So I am bullish on this thing. But I also point out that in this chart, you can see on the S&P, for example, you have room in a healthy uptrend to still see 3, 5, and 10% pullbacks. If we see a pullback of 10%, I'm telling you what, the bears are going to get really loud. And at that point, I'm going to say that's a great time to buy the market. And I'll tell you why. That's my opinion. I could be totally wrong, by the way. It could go down 50%. But most likely, historically speaking, a 5 to 10% pullback in the S&P 500 is actually quite healthy and actually usually a pretty good buying opportunity. So 5% may look pretty scary. In the meantime, that's a move down to like 5,400, right? We were almost at 5,700. So that is a big haircut, but it is also a very healthy and normal one. A 10% pullback would bring us down to like 5,100, which again sounds terrifying to people who are not kind of used to market flows. But what we're looking at here is not the normal trend for S&P and NASDAQ. You don't usually see it move in such a easy trend like that. Usually there are bumps along the way, and that bump, in my opinion, will scare a lot of people out of their shares and will be a nice buying opportunity, in my personal opinion. So that's my take on the indices. I'm watching the NASDAQ here today. May try and take a stab at a long position, but please remember, when I'm telling you, like I'm talking about a campaign, I don't know which pullback works. Do we see a pullback here and that's it? Like we've been seeing where these little pullbacks get bought. I still think they're worth a stab for me personally. But if we get a deeper pullback, I welcome it. I'm happy to take a stop loss and say, okay, fine, let's try again here. And let's set up a campaign where I'm willing to take a couple different attempts, keep my risk as managed as possible, and try and catch a winner. I hope that makes sense, but that's just a little breakdown. We are going to take a look at several charts today. We're also looking at the Dow Jones. I like the Dow on a pullback as well. So if you get this, sell-off kind of continue, if we get a deeper retracement, that 40,000 round number play, I like that for a possible buying opportunity on the Dow Jones. And finally, let's take a look at the Russell. You can see I've got all these charts marked up already because I've been looking at them myself. I'm not quite ready, but I'm watching several setups here today. Now, let me also say something. Let's say that I buy here and then I try again, and all of them completely flop. Then I would be thrilled. And as weird as this might sound, there's been something I've wanted to do for a minute, and Frank and I were talking about on the way out of the office yesterday. I've been wanting for a long time to start buying some individual stock shares. But personally, I only really like to buy individual stock shares for the long term. This is just the way I have always done it and the way I like to do it. I like to stack shares when the S&P 500 has a 10% or bigger pullback. So I actually have like this weird, I obviously want my trades to work out, but if they don't, even better, because then I can go start adding to the stock portfolio. So you kind of have to think through all the scenarios. I think, and this is my best judgment, that pullbacks will be bought, and that as much as I would like to build a stock portfolio, might not be coming this year, right? Or build out my stock portfolio, add shares to companies that I like. I really only like to buy companies for the long term when I feel the market is itself, priced okay. And I think it's still a bit expensive. So from a long-term perspective, I'm not necessarily a buyer, but from a momentum trading perspective, pullbacks on these indices for me right now are innocent until proven guilty. Hopefully that makes sense. I got a sound effect for you.
You want to see PNL? I don't have it right now.
I don't have it right now. That is a quote from our very own Ivan. Okay, so we also got to talk about gold. We got to talk about silver. I want to talk about this silver setup that I'm seeing as well. We're coming back down into the 29 level. We're getting some discounts here, and I'm actually really interested in maybe taking a stab on silver. I have so many different things that are finally setting up. I've been in some good trades that have been running hot for a minute. I've stopped out or trailed out for profit on a lot of different trades. And now I've got some dry powder and I'm looking for some setups. Hey, Ivan's in the chat. He heard that. Ivan, we'll roll it back for you. This is courtesy of James. He clipped you and it was hilarious.
You want to see PNL? I don't have it right now.
Well, actually, hold on. I got one more. This one's better.
Ivan helped me see the light.
That I know Ivan is laughing right now. That's funny. Ivan helped me see the light. That's true. Ivan does help us see the light. Yeah, Russell keeps pulling back. Dollar index breaking back above this 104 level. We'll keep tabs on it. Let's see, what else are we looking at? We got the NASDAQ, Russell, talked about those. Silver's a neutral reading, so I'm gonna watch that one. Gold is a bullish reading. Am I going to re-enter gold? That is probably the question of the day. And the answer for me is not yet. I trailed out of my trade right there. And the reason that I trailed out was because price did show some reversal tendencies here, came up, hit that 24.50 level or whatever, surprised everyone how far it could go up very quickly like that, broke through the highs. But this lack of follow through at this level tells me for now, that is a pause, right? We'll take profits on the move. What a wild trade it was. I mean, I wish I had like 10 of these every single week. It would be fantastic, but you wait, I've actually had a really good, stretch where I've had a lot of really big winners, and it's not actually very common for me to have such big winners like that. But when they happen, they're really nice, and you kind of just gotta let them happen and embrace them. And then when they go, you gotta say goodbye. You gotta wave goodbye. So I will miss the gold trade. It was a really phenomenal move. And let's see if we can catch the next one. So how do you catch the next one? Well, what people will see when they watch a video or a live stream where I've got one of those big trades running is they'll only see that trade and they'll say, oh, Nick must just have some secret sauce. He knows when that is going to happen again. My truthful answer to you is I do not know when gold is going to make another parabolic run or drop off the face of the earth. I don't know that. I may have a bias or a general idea of what I think will happen, but it is basically an educated guess, right? Trading is about educated guesses and managing risk appropriately. So for me on gold, it's like, okay, I still like the bullish side, but I'm really liking the indices for pullbacks right now as well. So will I take another stab at going long gold? Maybe. I'll keep an eye on it. I still like the upside. I still think the overall trend this year is to the upside for gold. I think that trying to sell gold just because it seems high is a kind of not a great approach, because it's high for a good reason. Central banks are buying it. Interest rates are coming down globally. There's a lot of geopolitics going on in the world. I mean, there are a number of reasons why I still like gold to the upside. But in the very short term, price action has told me, all right, Nick, you're good. Take profits. Get out of there. So I'm out. I'm out of gold for now and watching for another chance to get in on it. Your commentary today impressed me a lot. Thank you. I appreciate that. CrowdStrike is down. See, that's another one. I'd like to buy some CrowdStrike if the market itself gives me a larger pullback. This would be on my list of stocks. You can see CrowdStrike has been actually getting killed. This is a cybersecurity company, and that is an area of the market that, if you know my stock interests generally, a couple things that I really like. I like software companies. I like technology mostly. I think like that's the millennial thing to do, but I really like the upside, the growth potential for tech stocks, for companies like that. But that's a careful game you have to play, because tech stocks also get valued the highest. And so when they have true downturns, they are much, much nastier than a lot of other areas in the market might see. Anyways, I also like medical device companies. Here's like Intuitive Surgical, a company that I would have loved to, or I would like to buy some shares of at some point. So there's some interesting stuff happening in the stock world. But again, the big one today, CrowdStrike down. XP, did they have earnings? Did they put out the earnings? They did. Earnings were better on the bottom line, but worse on the top line. Must have had some sort of guidance that was not super exciting. Nvidia, Medtronic, Wynn Resorts. These are just some of the companies that I want to watch if we do start to see a larger, broader pullback in the markets. Those are some stock shares I'd like to add for the long term. Not all of those, but some of them I like more than others. So, what level would you buy on gold right now? I would not buy anything. I'm waiting. I kind of have to see what price action does throughout the day. If I take any position on gold, I will share it inside of the VIP room. By the way, if you're not in there, today's the last day. Let's really quick hype this up. If you guys are not already in the VIP group, if you want to see the trades that I'm taking, as well as Frank's trades, we share all of our stuff inside of the VIP channel. You can find out information and get access to that huge discount by sending us a direct message right now on our live chat. So when you send us a direct message on this link, you'll be connected to someone on my staff who can get you set up with a membership at the 45% off discount that we are doing. And that is ending today. So that's your last chance. If you've thought about getting a membership with us, there is your last shot to do so. We've had a lot of great new people join us and get in on the action. We got so many things setting up, so many charts that are looking like interesting opportunities. So we will be very active in there. And if you're not already in there, we trade everything from FX to commodities like gold and oil and silver. We trade indices heavily. We trade all sorts of different stuff. So if you're not in there already, there's your chance. Get 45% off. Come join the membership group. Get involved. And yeah, there you go. Silver also, again, like I said, just really dropped hard. We also have oil down slightly on the day. Bitcoin is bouncing off of this. I was looking for this pullback. This is another one that I was watching for a pullback on, was just to push down into like this level here. Didn't quite get it. So might have missed my entry on Bitcoin if it pushes higher. That's okay. I'd rather just wait for it to come to me if I'm going to set up the trade. Otherwise, I won't touch it. Dollar Swiss. This is a trade I'm still in, and this one is it's going well, but we're seeing a little bit of pushback now on it due to the dollar strengthening. So what I'd like to see on this one would be some sort of lower high, in which case I could trail my stop. Otherwise, if we see this thing rip higher, then I may just take a very small profit on, but I'm willing to risk giving back a lot of my profits for the chance of, what I think could happen, which is a bigger rollover in the dollar index. If we don't see that, and if I'm wrong, then again, I won't lose money on that trade. I just won't make as much, which I am comfortable accepting. S&P and NAS back to neutral on the day. US 30 still pulling back. Russell, VIX, what in the world is that candle? That must have been some sort of weird pricing thing, because the VIX, I'm pretty sure the VIX didn't go down to 10.6 actually. And if it did, it traded there for like a split second. Yeah, there's the 1 minute chart. Anyways, the VIX is the volatility index. It's a really interesting chart to keep on your watch list. I definitely encourage people to do that, because the VIX will give you an idea of what market volatility is expected to be according to the options market, which is really important insight. Euro dollar tried to break this 109 level and has now corrected back underneath. The pound USD might be pulling back. I do like this one on the long side as well. Dollar yen retesting this broken level of support. So this was a huge area of support here. Retesting it now. So we'll see. Trader Nick ignores my Mexican peso. I don't really trade the Mexican peso. I appreciate your chat and watching the audience, but I really only pull up charts that I actually have something to discuss. Yeah, the dollar yen looks interesting. but I don't really have a bias on this one. Dollar yen, I think, is like a neutral reading on the EDGEFINDER right now. So I really don't have anything to do with that one. Let's see. Yeah, the euro is getting a bullish reading on the EDGEFINDER, but I don't have anything to do here. Also, I'm very curious. We're going to see some scores move around here this afternoon, because this afternoon we get the commitment of traders data, which will show us what institutional money is up to. What are they buying this latest week? What are they selling? Where's institutional positioning overall? Let's also have a look at retail positioning. This is really interesting. So we've got S&P 500, euro, pound. These things, according to retail traders, are more on the short side. So these things are being sold by retail traders. At the same time, you have some things getting more bought by retail traders. Then we get a contrarian signal on the EDGEFINDER for this metric. So when you see heavy buying from retail, it gives us a more bearish bias. And when you see heavy selling by retail, it gives us a more bullish bias. That's kind of the way our system works on that. USD CHF, what's the reading on the EDGEFINDER? I think it's neutral now. So when I took the trade, it was a bearish setup, and I believe USD CHF, yeah, is neutral now. So this is a good example. Sometimes people will ask, well, Nick, if you are in a trade and the EDGEFINDER changes bias, what will you do? Usually, almost always, what I will do is if the trade is like moving in my favor and I'm just trailing stops, I will just continue to let technicals play out. So I'm trailing this stop. If it keeps moving lower, then great. If it reverses, then we're out. But the bearish reading that happened over here ended up being really nice push lower. And now I'm just trailing stops on it to let it run if it wants to. So yeah, we'll keep an eye on it. I mentioned this earlier. Do you journal your trades? Somebody asked. If so, could you recommend a simple journal to track trades and performance consistently? I journal a lot, but I do all my journaling inside of our group. I know it sounds like a plug, but genuinely that is kind of the value that we offer. So I'll show you this. Like when we take trades, gold, silver, etc. Also, I need to update this. Trailed out for profit on gold on the trade. Shout out to the fellow bulls. Okay, so yeah, inside of the group we share what we're entering, what we're exiting, why we're in trades, everything that we're doing and why. We also have a journal. So I have a journal, Frank and Ivan, we each have a journal now. We just added this feature so that we can write to you guys what we're thinking, what we're looking at, what we felt about a trade. So we not only journal, but we journal publicly for our members to learn something from. So I highly recommend, journaling to some degree. And my journal is like my YouTube channel and our readable content that we offer. Like we have our Discord channel, our Telegram channel. That is pretty much our journal. So I do journal every single day because it's also part of my work. But it is very important, I think. So even something as simple as, writing in it a Word document, I think is fine. But for me, I do it all inside of our Discord channel. So also last call on this, like I mentioned earlier, we are ending our 45% off discount sale. We're doing 45% off for stream viewers right now. If you click the link in the chat, take advantage of that discount and join us in the group. Don't miss it. Take advantage and you can come join, see all the trades we're taking. And more importantly, why we're taking them. Okay, guys, we're going to take a quick break and then we'll be joined by Kenzo to take a look at some more charts and setups. So stay tuned. We'll be back with Kenzo just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about OANDA. OANDA is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out OANDA, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, and we're back with Kenzo. What's up, Kenzo? How you doing, man?
I'm doing great. Thanks, and you, man?
I'm good, and it's good to have you back on the show for kind of a volatile day today. We've had indices selling off. We've had gold and silver making moves lower. Dollars rebounding a little bit, and the VIX has been making a big move higher here recently. Kenzo, what are you watching today? What's on your radar?
I was watching actually gold, and also Nasdaq's and S&P 500. I was not actually on currency pairs, so yeah, mostly we just saw stock markets actually selling, but on Nasdaq, to me, it was not really that surprising. But I have a nice reversal. I think we might have a very nice reversal maybe later on if we don't really break the support that we have here.
Sure. Yeah, and as you mentioned, bit of a first sell-off in the indices that we've seen in a minute that has been a little bit more aggressive, I would say, because we've had a lot of like these tiny little mini pullbacks that just get bought immediately. This is the first time I've seen in a minute or some time since really April that we've seen true selling coming into the market. But to your point, this has been possibly an opportunity, in my view, as well, that there could be some good buying opportunities in here as well. If you looked at April ended up being a really good buying opportunity, and that was a pullback on the S&P 500 of, well, about 6-7%. It was really not huge, but when the bull market is really strong, that's usually what happens. You usually get dip buyers coming in around the 5 to 10% mark. So we'll see if it has more room to pull back first, or if it's going to find support and bounce already. The NASDAQ showing some wicks. I think you had the same kind of chart marked up here, showing some wicks off of this support level already. We'll see if this ends up being, a dip buying spot already. But so you're watching the NASDAQ primarily?
Yes, I was actually on Nasdaq, also S&P 500. Actually, we already have a pending order, so already our pending order is just triggered at the moment. At the moment, I think this sell is actually good because we don't really have bad stuff going on, except the outage that we had during the day. But when we check the stock markets, everything is fine. Plus, when we check when we check interest rates, there is a hope that they will be cutting the rates maybe around September. Even though we had this reversal, but I think we already have some good news. Then I think people, they were just taking their profits before going up again.
Sure. Yeah, and I guess on the same, while we're talking indices, Kenzo, what are your thoughts on the other ones? So other than just the NASDAQ, maybe the S&P 500 or the Dow Jones, what do you think about those? And is the NASDAQ your favorite setup of the three?
Yes, but I think S&P 500, it's a very, very, the structure is quite clear. The one that I'm still waiting for to reach maybe the support area, it was US30. But on S&P 500, on my side, I think everything is quite clear. And the reversal was not really aggressive as the way we saw on a NASDAQ. So I'm expecting to see maybe a nice reversal from this level. If the market respect that zone, already we have a pending order on that zone. You can see that. So this is the one that I feel like it's quite clear. So on US30, now I was waiting for the market to reach this area, but it seems like the market just reached there because I think the market was here. So we reached this level that I think it might be a potential resistance if maybe we go on a smaller time frame. So I think the market might reverse from where it is at the moment.
Yeah, and the Dow Jones saw a huge push
I
higher
think
here
you
recently, Kenzo, because of the really the rotation trade,
yes,
right?
yes.
A lot of excitement about possibly other companies joining the rally. At least that was the hope. We saw the Russell 2000 really explode higher off the CPI day, and there was some continuation. There was this idea, okay, we are seeing inflation cooling. The Fed is likely to cut interest rates, and that could spur growth for some of these companies that have been left out of the rally, specifically some of your blue chip companies that are in the Dow Jones, the Russell 2000. So that's why I asked about that. Is I was wondering if you're more of a let's stick with big tech kind of guy, or if you're more of a let's go to the ones that have not seen as much of a rally. Would you? So with the Dow versus the Nasdaq, you seem more interested in the Nasdaq. Is that right?
Yes, at the moment, I like that idea because at the moment, that idea of let's say they're gonna cut the rates, so which means at the moment because smaller companies were not performing very well when the rates are higher, so which means once they cut the rates, smaller companies they can now breathe, which means they
Mm,
might take the loans. Now it's time for us to look for small companies, which means Nasdaq, USD, and S&P 500. Those companies are already big, you see, and sometimes it's not really easy just to jump on them because their shares are already expensive. So, if yes, if I had an option to look for smaller companies or smaller indexes, I was going to check that. But on my side, the option is just S&P 500, USD, and Nasdaq.
okay,
So unless if maybe there is a Russell on my side, I don't really. My broker doesn't really have a Russell 2000. If I
sure.
check, last time I checked.
Yeah, and that's a good point. I think that the Russell is an interesting one for those who can trade it, whether it be on futures. I know we have a brokerage that actually supports our channel here, so maybe we should mention them. Vantage that actually offers US 2000 to CFD traders. So for those of you who are interested in Vantage, we'll drop a link in the chat for that now. Which again, really great CFD brokerage for people outside of the US. Anyways, the other thing is, gold here. You mentioned it a moment ago. I'd be curious to get more of your thoughts on this as well. So gold reached an all-time nominal high on an inflation-adjusted high. The all-time high is about 3,200 in 1980s. Fun fact for those of you guys who are interested. If you actually look at gold on in a true adjusted for today's US dollars basis, the all-time high was in like 1980s 3200. So where we are today, 2400 sounds a lot lower than that. So I actually think that there is, on a bigger term basis, more upside for gold. I think we have plenty of more of upside overall. That being said, price action in the last few days has been much more bearish. We've seen some topping tails here and some follow through here today. I'm officially out of my position on this one. So I'm curious your thoughts on gold. Would you be buying this pullback, or would you wait for more? What would you look for in order to get into a position like this?
Yeah, on gold, I'm still very bullish. Uh, as if we check the overall trend, it's still actually continuing. So the reversal that we have here, I can say it's understandable. The market was already very high. Maybe people they were just taking their profits. But with the structure that we have here, it might make sense that we have enough room for the market to go higher. Why? The first thing is going to be the rates cuts. Just because now we are going on the rates cuts, that is a good news for gold. So we will see maybe a nice reversal. So yes, we did break the highest level there, but the market is coming back, which is a good thing because it was difficult for us to buy around that level. So at the moment, I had a small like it's respecting this horizontal. Let's say it was a previous resistance, now it's a support. So I think the market is moving away from this level. Then I think we'll actually see a continuation of that buy. You see, or maybe I might say we'll end up adjusting this trend just to fit this in. Then we can just continue like that, just to reduce some confusion.
Sure. Yeah. And again, big sell off today. But to be fair, some of the better buying opportunities have followed these sorts of days. I remember this day was the day that people got really concerned because China sort of issued that they had slowed their buying process of gold for their central bank. Sure enough, that day caused a huge 3% sell off in the price of gold. And the following day would have been the perfect buying opportunity. So when you get these big sell-offs, I agree. There's probably some profit taking here, but I do believe that the overall trend for gold this year is still higher. We have well surpassed where I actually thought price of gold would go. At the beginning of the year, I put together a fun presentation on why I thought gold could go to 2280, which was this level. And at the time it seemed crazy because we were over here and we did see that huge move, but we saw it get there by like April. So I was like, oh my gosh, I thought that would happen at the end of the year. So now I've adjusted my longer term target for gold. And I think it is, I think 2,500 is a fair checkpoint for us to go test. In fact, I think it's higher than that, but by end of year, I think that 2,550 is very possible. Now that's assuming it's making a assumption that we do see the central bank cutting interest rates. And that's where I think market data sort of suggests we're going right now. And I'm not a, Kenzo, you and I, we know this because we've done this for a long time together. Fundamentals are not a certainties game. It is all about an educated guess on what's going to happen. And as you've mentioned, bullishness on the NASDAQ, and gold as well. We've both talked about those two things. The common theme there is that we're looking for rate cuts to carry us there. Rate cuts to for the NASDAQ to stimulate the economy back into a stronger consumer base, which could be good for especially smaller companies. And gold just trades higher on interest rates getting cut. So we'll see. But just wanted to share that thought. The last one I had for you, or question for you, was the dollar index. You mentioned it earlier for a moment there, but maybe for the currency traders as well as gold traders here, I'd love to get your thoughts on the dollar index, either on the technical basis or fundamentals, wherever you'd like to go with it. Just wanted to get your thoughts.
Yes, dollar index, it's been actually bullish for quite some time. So it was reversing, even though it was good for it to reverse. We had some more than, I think, 4 or 5 economic news which were actually negative, and it was good. But I think we had this uptrend, and mostly we know very well that the market tends to respect the trend for quite some time, you see. So just because they're going to cut the rates or something, it doesn't really mean the market will just immediately react to that. Sometimes it does. Sometimes the market doesn't really react to that, you see. So I think we're still going to have CPIs coming month. Let's say this end of July, new month is we're going to have everything. And that maybe might have an effect here. But at the moment, it shows us that whatever that we had as some negative events, yes, they had their run, but it seems like they were not really enough to continue with that bearish momentum. Plus, for quite long, the dollar has been quite stronger. So every smaller event that it's negative, it's not really enough just to turn the overall trend, you see. So, and another thing, when we are going to talk about fundamentals, is just because we have some good news, it doesn't really mean that immediately that is going to be some good news, like the market will be reacting to that. Like yesterday, Netflix reported some positive news or earnings, but the market was just selling. But if we check that nicely, it's just fundamentals. Maybe people, they're just taking out their profits so that they can easily buy, or we can say they just rebalancing their portfolios, you see, just to make sure that they can go back and buy on the lower price, because you can't just wait. Mostly those areas, they were higher. So it's better to take out some profits, and that will have a huge effect. Like now on the dollar index, yes, we know that the things are going to go good maybe in a few months because they're going to cut the rates, but the reaction, it doesn't really just happen as positive here or as negative. Obviously, we expect the market to go down, and which means it's actually good for the dollar index, because if it goes down, it means inflation is going down, you see. But the market won't just react instantly. But maybe in the coming weeks, it's where we're going to see the market starting to react.
Very, very good points there too, Kenzo, about just kind of when you look at the dollar index, we've had a lot of kind of turning factors. We've seen the CPI come out. We've seen Powell sound pretty dovish in a couple different meetings. Jobs data has been cool. Unemployment claims have been on the rise. So that's kind of the trend. This move, I would argue, is counter trend to all of that data and all of kind of the overall trend. That's okay for, even in a trend, there is going to be counter trend moves. So we may see this big wave. You may see a pullback. You may see, that's how the continuation plays out. So the other thing I would mention that I think is worth talking about for a moment is the rotation out of the big tech companies, your Apples, Microsoft, Nvidias. That rotation is also counter trend. We have to admit that the winners have been the big tech names. So the reason I point that out is that if the winners are the big tech names, and that's been the trend for, months and months and months, and now we see other companies joining the party and maybe people rotating out of tech into that is counter trend because it's the new development. Now, could it take root and really become the new trend? Sure. But until it is truly, decisively the new trend, it's counter trend. So my opinion is I also like the NASDAQ. I also like big tech. I like being in the winning players that have gotten us to this point in the indices, more so than I like the small companies. Now, it doesn't mean I think that there's no room for small companies to expand, but I'm a trend follower, and the secular fundamental trend has been stay with the megatech big winners. So I'm kind of still in that camp. I will be buying the NASDAQ primarily as those are weighted towards the big players, for better or for worse. I might be wrong about that. And that's the thing is, that's the beauty of trading is there's people who disagree with me. There's people who agree with me. And that's what makes a market, right?
Yes, and on that, on those smaller companies, as we see bigger indexes going down, most likely that can also be the factor to why we see DXY going up, because those smaller companies, they are now going higher, and there are many, obviously. So which means it's a good thing for the economy also, because the economy, it was not going to be based or focusing only on 4 companies or 5 companies which are bigger. But those small companies, most likely they run economy. And when we focus on those small companies, one way or another, we're going to see DXY going up. And that is actually a good, that's why we see maybe it reversing over there, you see.
Sure. Yeah, well, good stuff, Kenzo. I want to thank you for your time on this Friday, coming on and helping us out. It is Fundamental Fridays after all, so thank you for being here. And we've just dropped the link to everyone who's watching. Make sure, guys, to go subscribe to Kenzo on his YouTube channel. He is making content over there that's free value. And again, Kenzo's a regular contributor to the A1 Trading Show. We really appreciate you coming on, and we will see you back next week.
Thank you very much, and your viewers, man.
All right. See you, Kenzo. Thanks very much. All right, guys. So, yes, we've got a little bit of red, a sea of red, really, today across the board for a lot of different things. You got the Dow down, NAS and S&P slightly lower, gold, silver down today. Bitcoin's up, and you have some currencies doing some moves as well. Yields are up on the day. I think that might be the culprit for a little bit of concern. Same thing with the dollar index making a move higher, as we just got done discussing with Kenzo. So some interesting stuff. I mentioned this earlier that I will be watching closely the commitment of traders data that comes out later today. If you guys would like to try out our software for 30 days, we'll drop the link to our trial application where you can check out what we have to offer here. We're a small company out of Atlanta, Georgia, called A1 Trading. We build tools and we host these live streams every single day. So if you'd like to try out our tools, we would appreciate it. We'd love your feedback as well. So take advantage. The link's just been dropped in the chat. We're now going to take just a short break, and then we'll be bringing back into the picture our next guest, Chris Pulver, who can take over here from here. I'm going to have to hop off, Chris, but I believe Frank will be joining you in just a little bit. So you got it from here. Guys, stay tuned. Chris is going to come in hot. I'm sure he's got some value to share with you, so stay tuned. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
What's happening, everybody? Happy Friday. Welcome back. Fundamental Friday. I don't know that was a thing, but it is. It's apparent. Hey, I've got some Netflix running. We're at 641. We've had some chop. Netflix beat top and bottom earnings, earnings per shares and revenue. They squeaked out a little revenue gain by 0.34%. Market's not really loving it too much. Netflix didn't move like Domino's Pizza, which is still down $70 for the week. We're actually at some fresh lows. That's a pretty impressive drop from 472 down to 404, well beyond the expected move. Netflix, my calculated move is $66, and we've gone a whopping nowhere. I think I centered this trade around 660. Yeah, I centered the trade around 660, so I'm only down about $20 in price. We were up as high as 680 again, $20 up, $20 down. Not that exciting. I have this trade out to next week. If price falls down into the 600 zone, that should make my in-the-money credit spread payable. Let me see what this is trading for right now. And we're coming at you live. All excited. I got a new computer, but I still have some things I need to download. So some of my software that I use day to day, I've got my other laptop running so I can take a peek at things. But anyway, this is a little, supercomputer that I'm happy to have up and running. I was running some backups all night. Let's talk Netflix. Here's my position. Netflix is, where are you? Right there. So my 600, 605, 715, 720. Right now trading around $8.10. I got filled on the trade for 750. So I'm upside down 60 whole cents on the trade, which is no big deal. I'm giving it some time. If we end up working ourselves a little bit lower towards the 600 handle, that should help that credit spread pay. Hopefully this 750 750 credit becomes like a, $6.50 to $6 debit, and I'll look to protect some profit there. And let me get something going on the SPX, which right now, let me bring up another workspace here. Load there. So we're trading around 553 on the SPY, 55.50. Excuse me. 55.50. Let's center a trade and see what we can gather on SPX today. Not the AM expiration, but here, 55.50. If I go out, let's see, a 13 delta, that'd be my sell. IV's up to 43. Hopefully I can get a little bit more premium out of this. So that's a 13 delta, and then I'll match that with a 13 delta here, and then 90 to 10, and 505 to 85. Collect about 290. Not bad. A little bit better. A little bit better. Not a bad little trade for the morning. So let's see here. Let's go 0 DTE tracker, centered around 55.50, and I'm doing the 55.05 by 55.90. Okay, so we're here for the morning. Keep an eye on this today. All right, so looks like 270 credit right now. It's gone down just a smidge. So 270 credit. Let me crunch the numbers. 2.7, I'm looking at a 15% take profit. Looking for $40. So 2.30 debit works for me. $40. And off we go. All right, let me go back to the stream, get some comments here. And what do we want to take a look at this morning? So here we are on the SPX red for the week. Okay, we're top to bottom down about 2% on the S&P. So about a 2.5% sell-off for the week. Interesting little statistic. We broke last week's highs. We also broke last week's low. That doesn't happen very often, but it did. So I would say that taking out last week's low more meaningfully, we are certainly a little bit more vulnerable to the downside. You know, this correction that might be at hand. We'll take a look at the SPY for a moment. Same thing here on the SPY. Breaking the 554 last week's low. 2.5% correction. You go to the NASDAQ. We have 2 weeks in a row on the NASDAQ with a sell-off that I think reached up to 5%. Yep, so 5.39 from high to low, and possibly some downside still maybe playing out. Keep an eye on this one. I'm looking for some levels here. Let's go back to this chart. So where are we vulnerable? Well, based on the SPX, what I see right now, down about 2.5%. We still have a trend line support that can come in at any time. So if we go high, low, falling back in, I would say if we take out this low, that would be, give me 1 second. That would be my, 1 second. All right. Sorry. You didn't just even wipe my nose. That would be the level I would think would be vulnerable to the downside. So if we come down to take out this level, if the bears have any momentum below that trend line break, this is where things get a little nastier as far as a correction. Now, I think it's still a correction. I don't think that necessarily the top is in. It isn't looking great, but yesterday's big shift, the big kind of dip in the small cap, we had a rip on the small cap. I took some profit on that just to be protecting. I also reduced that exposure because I noticed. I think last week on the show, or maybe Monday this week, when we poked all-time highs. Let me go back to this. So on Monday, Tuesday, when we poked all-time highs, my Russell was killing it. Like I went from like a $6,000 profit to like $30,000 in profit. That has since pulled back to about half of that. So I'm just shaving my position down. Say hi to Benji, everybody. He's my trading mascot. He's now like, oh, you're not hanging out on the couch anymore. Well, I'm gonna mess up your stream. But I was at all-time highs, Monday, Tuesday, and then once we started to see the decline on Wednesday, Thursday, okay, fine. So I thought I'm clearly a little bit more correlated with the small caps. It's been a good run, but rather than being kind of all, what felt like all or nothing on the small caps, I'm like, well, just scale back, reduce some of the exposure, take some profit, and then see if things stabilize and I can reposition. So I still like Russell, to the upside. It's just had a very volatile week. This is the IWM where it was Monday up, Tuesday way up, and then Wednesday peaked, and then Thursday. Yesterday was a pretty ugly day P&L wise. But it was basically eating into the profits that I had seen Monday and Tuesday and Wednesday. All right. So if you look at the week, there's where we started. There's where we're at. So even though we had this little exciting move, I want to see from a technical standpoint if the IWM is just going to pull back and allow me to position for some other nudge to the upside. Okay. Yeah, I saw that, Lee. I don't know if that's actually a true price feed or not. I feel like overnight the VIX isn't going to do that. Can I maximize the chart for better view? Can you maximize your screen? I'm staring at a 24-inch monitor. What else? What are you looking at? You watching on your phone? How do you want me to maximize my chart? You want this? You want like F11? Try this guy. Not working? That's all I got. I guess F11 doesn't work. I don't know. Hopefully you can figure out something. I mean, I've got the screen, or I can just make it larger. I can try, but I try to get as much real estate on the chart as I can so I can go back and see what's left for resistance and support and structure. Okay. So what I'm talking about here for the Russell is we've had a great run. We've had a great break. Technically, I could probably get something like this to the upside. In fact, I may look at a trade right now. IWM, let me see what I can get for it. I mean, we're going to have a slightly higher IV. IWM, if I go out to next week, let me have a look here. IWM trade, if I go out to the 26th. I mean, it's just going to be a credit spread, but let me see something here. I would probably do something fairly inexpensive. If I did at the money, 217, let me do like a 218 by 217 if I can, maybe out to the 30th. 218 by 217. I can collect about 40 cents on the dollar. That's not a bad play if I looked at the trade going to this level. So here's what I'm thinking. We have a blast off here. We pull back. I'm going to see if we can come back and retest the high and do that within the next, maybe 1.5 to 2 weeks. If I go out to August 2nd, let me see here. So let me try to switch this up a little bit here. Positions. So I can go to an August 2nd Friday, which we may have non-farm payroll on. I'll try the same thing. So 218 by 217, same credit because it's pretty much at the money. If I go one strike up, I'm giving the market about $1.10 head start, which I don't necessarily want to do. Now I'm giving the market about a 20-cent head start. 217 by 216. What are my fib levels here? 215. If we tap that 38%. So I think what I might do is look at some staggered credit spreads where I'll put in one here and see if we head higher. If we go down a little bit, I'll put in another one, see if we head higher. I'm just going to look at generating a couple bucks on this one. So let me see if I can get filled for, I'll do a 218 by 217. Take my 47 cents. Let me look at a stop loss there about, so I'm risking about 250 bucks to make 250 bucks. Let me see if I can get filled at 48 cents. Mid is 48. Let's try 47. Come on now. Let me see. You know what? I'm going to do this. I'm going to set it at 50 cents and just leave it good till canceled. Okay, that's going to be pending. And I'm going to put this for everyone's account here. Here we go. Just give me about 30 seconds to get these all entered in. Okay. All right. So let me double check. So that's pending. That's pending. This one got canceled. So let me try this trade again here. Similar order. 9732. Okay. So 9732. There we go. Okay. So pending order, pending order, pending order, pending order, pending order, pending order. Okay. So those are all pending on the IWM. And that's a 218 by 217. bull put spread for 50 cents credit. And I'm going to take this out to the August 2nd expiration. That will be pending. And I'm also going to look at doing the same thing on the Qs. So we're trading here at 479. I'm going to try the same type of setup on the Qs and just see over the next couple weeks if the market stabilizes. Qs have been sold off by 5%. I'll do a little at the money, risk about $250, go out to August 2nd and see if we can stabilize. So if I did a 4, see right here, you know, there's pretty good support on 475. I'm going to see if I can do like a 475, 475 by 474. And we're trading for 36 cents, right? IV is up to 62, which is pretty decent. That's way better. I mean, it wasn't that long ago, within the last month, these were trading at single digits. The IV rank was like 5, 4, you know, and it was just, you had no real selling premium whatsoever. Okay, I see the comments for gold. Yes. Okay, so let me see if I can do a 475 by 474. Right in here, we had recent levels, 475. Let's see. I'm curious on the Qs. Are we going to, you know, pull back and then hit this gap and then head lower? Or are we going to, you know, like we did here, we you know, gap up, and it's really going to be all about earnings season. I have some bear traps and a lot of hedges, so if I'm wrong, I'm okay taking these small risk on the trade. But I'm going to see if we can kind of hang into this like 476 by 475 area. Let me try this 476 by 475. Put this in for 50 cents, and let's do. We'll go 5 contracts here. Okay, so a small risk, but across the board, if we're right, prices are stable out to the 2nd of August. We'll see what happens. And let me get these set up. So send. Okay. Get these in everyone's account. $8,051. Okay, so those are in. Tracker, this is IWM, 8/2 expiration. And the IWM is 218 by 217. Okay, and then QQQ, 8/2 expiration. And this is a 476 by 475. Okay. All right, so that trade is in and pending, 50 cents each, and we'll see if they get filled. So working order on the Qs, working order on the IWM, good till canceled, and those are out to the 2nd of August. So if we have a bit of a shed here for about 6% down, you know what? I think this is gonna be annoying, but I'm gonna cancel those trades. Reason why, I mean, the IWM is okay. The Qs, I think, is a little bit more vulnerable to the downside. This could be additional rotation out of large cap tech a little bit. So I'm gonna cancel the Qs really quickly. Let me cancel that order. And if we get like a 10% correction, I'm way more inclined to jump into the Qs. But I think at 5% still vulnerable. Let me just make sure I'm getting all these canceled properly. All right, so I'm going to keep the IWMs in. So that's pending. Yep, so IWM is still good, still good. Yes, yes, and yes, all in. All right, cool. Okay, so IWM is okay. This one I'm just going to cancel. So Qs are canceled. IWM is in. Let's get some more going on here. Any book recommendations for trading? Yeah, there's 2 books that are great. One of them is, I got them sitting right here. So this one, you can, let me give you the cover. This one is a great one by Tasty Trade, Julia Spina, The Unlucky Investor's Guide to Options Trading. That is pretty much Tasty Trade 101, their style, their strategies, 30 plus years of data, probabilities, mechanics. It's a great book. Easy. For an options book, it's really easy to read. One that's a little bit more.
Hey, Chris.
I'm not gonna say advanced. Hey, what's up, dude?
How's it going?
Good. One quick book recommendation. The other one is who is the author here? Brian Overby. It's called The Options Playbook. So again, you're asking me trading books. I mean, I'm trading options a lot. That's pretty much how I'm managing all my money. So those are two good books to have some awesome references. If you're looking for other stuff, there's Market Wizards is always a good one to read by Jack Schwager. Trading in the Zone is a pretty good one for trading psychology. Read the Big Short. There's the something about the bet. Fudge, like Molly's Game is a good book, but there's anyway. Those are the 2. So Julia Spina with the Unlucky Investor's Guide to Options Trading. Brian Overby for the Options Playbook. Again, they're pretty easy to read. Also great reference sources. So hopefully that helps. And Frank, happy Friday, dude.
Happy Friday. How was your
birthday? How was your birthday? Did you go out and enjoy it last night?
No, so it was on Tuesday. Didn't really have any plans, to be honest.
Okay.
This weekend we were planning to do something. I have a friend who's got one. His birthday's next week, so we're planning on doing something this weekend.
Nice.
So should be fun. But I don't know. I've been kind of out of doing activities and stuff for a little bit because I wiped out during a game of kickball. In some rec league with some of my friends, and I got a little cut up on my arm. You see, like this.
Oh, dude, that's nasty.
I got one on my hip and my leg, so I've been, it's been hard to like go to the pool or like go out just because you don't want it to touch anything. But
just leaving a nice little scab stain on the bar or the restaurant.
Yeah, don't want to do that. Could stick to the bar.
It could. That'd be rough. Dude,
I wanted to ask
kickball. You got to tell me. How what'd you do? Just slide into home? You stealing home? Like that's a pretty nasty spill.
So we were on a kind of a bad field, and I ran to catch a ball. I was playing in the outfield, and I just, I was catching up to it. I slid, caught it, but I didn't realize what I was over. I thought I was in grass.
Okay.
I was on some dirt and rocks, and so I've had these big brush burns for about a week now. So it's been a lot of fun.
Yeah.
But
all right, what were you gonna say? I gotta ask you something.
I wanted to ask you. You took that Netflix trade, right?
I did.
I wanted to see if you had gotten out of it. I know post market last night it tanked, and then it moved hard again this morning. I was just wondering if you got a decent price out of that.
I mean, I'm staring at it at 750. I got filled at 750, but it's trading for $8 right now. So I didn't get anything out of it. It didn't move, towards my expected level. 720, we were closest to 680. My 600 were trading at 639. I need Netflix to have some follow through. So this is exactly why I'm trying to trade more credit spreads, because if I lose on the trade, I'm only losing 250.
Yeah,
So
that was a good
I'm okay
call.
taking that loss, as opposed to if I had paid, like if we looked at this with that reverse iron condor, if I had paid $30 to $40 for this trade, I'd be upside down probably $1,000 right now versus upside down $250. And I'm
Yeah,
actually upside down $50. So totally manageable. And I give it till next week to move. So there will be way more earnings trades. The DPZ was the one that worked out really well this week. That was a crazy big move, right? We expected $31 and it moved $70. So that was an easy credit spread that collected $7, and it was decayed down to like $4.50 yesterday. So that was an easy
nice,
trade.
cool. I wanted
Are you
to.
still in anything? Did you take Netflix at all?
No, I didn't take any earnings
Okay.
plays. I want to talk about gold because I'm still in it.
Okay.
So let me share my screen really quick.
All right.
So gold saw a lot of profit taking the past couple days, but I mentioned when I bought that if price did turn around, that I wanted to build a position on it.
Mm-hmm.
So I think in gold's case, this could be a decent opportunity if we see a close above this trend line and the support level. However, if it keeps coming down, you're gonna have to keep looking for support levels on that. But this whole range basically between 2420 and 2290, I think is a good channel in which, it's traded in that since April and broke out recently this month. So that's a good sign that we're touching higher highs. This sell-off, I think it scared away a lot of the bulls, but I'm still pretty confident in gold. I don't really see a reason why it should fall. Um, those we're expecting 3 rate cuts, so I think at least one is very likely.
Mm-hmm.
So if we see a weaker dollar or lower rates, we're going to see a weaker dollar. And then I'm pretty bullish on gold, and I'm looking at just more places to build my position on it. But it might take some time because we've seen price move almost nowhere for a couple months at a time. So I think it's kind of a patient game. And if it does break underneath the support, it's going to be tough. But I think I'm just I'm kind of holding out for this for I don't know. I like seeing the 2500s again. If we can go back up there, but I don't really know exactly what this recent sell-off was. I wanted to ask you about that too. If you looked into gold at all.
I mean, I think it could be profit taking related. See, Trump 2.0 could muddle EM friendly Fed cuts. Yeah, I could see that. Recent sell-offs open up opportunity. Let's just read it up on Daily FX. I think that rate cuts are good. I think there could have been some profit taking at highs. I think there's still a lot of accumulation zones on gold. I mean, this range, and I've said this from the beginning of this range, it's like once we had this kind of poke and divergence, I thought that this could be that type of structure on gold where it's just another accumulation phase, right? We go up, we accumulate, we go up, right? I just think this is the same thing. I think this is a larger area with more volatility. Like nobody was paying attention to gold earlier this year, Frank. When this move happened, nobody paid attention. Nobody was long on gold. When we first had that run on gold, it felt like, wow, gold's up, but nobody was really in the trade. This is the point where there's a lot more participants, a lot more people that are now like, oh, gold should be on my portfolio. I'm going to add to it. And there's going to be some, manipulation up here. There's going to be some pokes and fakes. But I think this is another accumulation phase that I think if you look out, let's say 6 to 12 months, I have a hard time believing that gold is down, below 2000. I'm thinking that gold is going to stabilize in here, even if we find, strong support at 2250 to 2300. I would think longer term that like 3K is realistic for gold. as we start rate cutting, maybe as we go into 2025, the markets aren't just perfectly, just lollipops, unicorns, and rainbows. Like we might have some real legitimate tops forming. I mean, we've had some frothy earnings. We've had some high expectations. The market really couldn't do anything wrong. It's been one of the smoothest volatility years since 2017. So, I mean, gold's been a bull market just like everything else. And it's just a little bit of volatility. It doesn't really change the outlook for me. So I don't know if this is more profit taking. I don't know if this is just part of the accumulation phase, but every time I get dips down here, I'm just going to stick with gold and GLD and gold futures. But I like buying down here. My stop loss would be just below the trend line around 2,200 or 2,100. So
Gotcha.
I think gold and silver both. I mean, I was actually more surprised with how aggressive silver sell-off was. I mean, and I'm happy to see that silver today is stabilizing, but I'm about to take some shares over the weekend on SLV. I have a 29,876 put that I collected 322 and 229 on. So I'm going to get assigned today, which I'm happy with. I'm going to get assigned at 29 and 28, and in this case 27. So I could get 3 out of these would be assigned, and then 26 is not assigned, and then 29, 28 assigned. Now my break evens on each one of these, this is what's going to be important. So if I take assignment, I probably need to just match this calculator and pin this thing. That'd be a little bit easier. So if I go 28.50 break even and 322 credit, so I'm going to own SLV at 25.28. To me, that's an easy repair. We're trading at 26 and change right now. I could get it called away for, maybe $400 next week if I wanted to. I'd like to sit on SLV and see, do we go back up to, 32 and change, because that's going to be a much bigger profit. If I own it at 25 and change, I'll just say $26, okay? And I get it called away where I want it to be at symmetry. That's a $6 move, almost $7 move at 400 shares. Yeah, I mean, I'd make $2,800 on silver if we hit that target. So I can repair it and not really think anything of it. I can keep trading a bunch of options around it, but I'm going to take some assignment and I'll assess, how long I want to hang on to this. I also think that if I'm long in here on silver, this is another one that initially I thought, if I go back to XAG, initially I thought that this was, oh, sweet, we got a little breakout bull flag. Well, that doesn't seem to be the case. So I think this is more of this type of look. If I go to a horizontal ray in here, something like that. So I think silver is now, showing the same type of thing, a little push, pause, little accumulation. I'm still very bullish on silver to 26 support, but I'd like to see silver kind of maintain this look in here and go higher.
Yeah.
Any thoughts on that? Like I was just surprised silver
like a
sold off
flag.
more aggressively.
A flag pattern is what you're saying.
Yeah, something like that. So
Yeah,
I don't like that it's flirting with the trend line break, but I don't know. I mean, I think as long as we're holding this level, that this accumulation would be okay. That we just have to break and clear, and then we're off and running.
Yeah, I'm kind of with that too. I've been noticing that the metals, well, I've only been looking at gold, but gold is kind of moving with the markets right now too.
True.
And I also wanted to point out different indices today.
Okay.
So we got the NASDAQ.
How's your Slide G doing?
Slide G is, I think it's at 90. If you want to check really quick, but I want to look at NAS first.
Okay.
As we get onto this long-term trend line. We started in April and we're coming down to test it for the second time in 2 days.
Yep.
I was kind of hoping, or not hoping, I would like to see stocks go lower, but I was kind of wanting to see a bullish hammer candle or something, some rejection off the lows for the close of the day. Yesterday kind of did that, but it still closed in the red. Today it's looking like the buyers are still not stepping in. So if we get a break below this is what we were talking about a few days ago. Where would we like to see the Qs, or where would we like to see SPY?
Yep.
If we wanted to get back into it here, if we break this level, I'm seeing like let's see, this is already a 5-something%, could be a 6% pullback. I kind of like the 8 to 10% range because we can go back to April
Yep.
The NASDAQ would be over 10% to go back to April's highs, but even so, that's not even, we could trace it back to the beginning of the year, and that's what I've been kind of thinking for a while. But you know, I would like to see prices there. Do I think they're going to move that hard? Not necessarily. I think this could be a good, I guess, opportunity to look for longs. If you're trying to be cautiously bullish, maybe make a small entry here. I may look for a long depending how this candle closes today. But if not, I may just look for longs farther out and for a farther time frame. But
Yeah.
that's the NAS at least. What did Slide G come in at? 91. Okay.
Yep. So similar to Russell, we've had a pretty aggressive snapback. I was up about 30 grand in the IWM trades, and it's been cut in half over the last 2 days. So I did book some partial profits. I just don't want to give some of it back. Real quick, let's go to small caps in a second. Let's talk about your Slide G. But NASDAQ, this is what I'm seeing too. So 1, 2, 3, 4, 5. If this is right, and we just play out like a simple 5-wave pattern, one.
Why does 5 matter?
Well, 5 waves is just typical L8 wave structure. So 5 waves is usually the top. And so what we've been waiting for is like, if this is the 5th wave, if and when it rolls over, then we're typically going to see an ABC correction. So that would be this right here. If we have an ABC correction, it could look like this. So if this is 5 waves and we've kind of topped her out, or him, we've topped out the market. If we have an A, B, C correction, this is what I'd be watching for, Frank. Either this comes back to retest this high, like you said, which is a good spot, or also test this low. If I'm going to reestablish longs, I'm going to box this in. Okay, if I'm reestablishing longs, it's in this area that I want to be looking to get long and then rebuild kind of a core position to then head higher. So I would expect from a percentage standpoint, I would love, and this is why I canceled my Qs just this morning. I'm in IWM. I'm going to keep trying to stomp on this Russell with a little bit more defined risk versus being long options and just do more sell options. But anyway, if we have a correction here, I would love that like 10 to 15% correction on the NASDAQ. So to me, that's what I'm after. 10 to 15% start positioning, go a little bit further out. Possibly willing to take some assignment unless we're just entering into like a horrible decline. But if I get, a 10% correction, throw in some credit spreads, try to generate $250 to $500 per credit spread, stagger them out month, go out maybe 3, 4, 5 months. I mean, I could generate maybe $2,000, $3,000 on credit spreads over a 3 or 4 month period. Does that make sense? So that's what I'm looking at from the technical side. Is I think if we're starting to roll over, and the SPY is the same way, dude. A lot of these trades on not just the NAS, but if you look at the SPX, I mean, this could be the same thing. I could keep that type of wave structure to almost all of these. And if this is, and again, it's not perfect. Elliott wave is not perfect, nor is Fibonacci. Like it's somewhat of an art form, a bit subjective. But if this is a correction year and we have a 1, 2, 3, 4, 5, it's the exact same thing on the SPX. So if we go 1, 2, 3, do we pull back to this resistance becoming support? Do we get a little bit nastier in here? But at those correction levels, I'd be more interested in a pullback that gets us into, let's say, corrections from, let's say, about 7% to about 11%. So 10 to 15 on the NASDAQ, about 7 to 11 or 7 to 12 on the SPX. But also, one thing here with those corrections is, are we putting in, look at this correction that we had back in July, August, September of 2023. It's that time of the year, Frank. We've had a great run up for the first half of the year. It seemed like the market could do no wrong, and I think that the market is a bit of a surprise. And let's throw something odd at everybody here today. Okay, I talked about this week, like the market came in with a little bit more clarity. Hey, I think Trump's going to be president. Hey, the Fed's going to cut rates, and that was a good reason for the market to keep pushing these all-time highs. But I think what just changed this week is we immediately had geopolitical drama this week, right? We have Trump that became vocal about U.S. and China and trade wars and tariffs. And I will throw this out there as a potential, blind spot that most people aren't seeing right now. But is it possible that Trump nor Biden become president? Because if there's anybody, I mean, right now it's like, who's the front runner for the Republican Party? Trump. He's not going to be, denounced as president. But I'm saying if the Republican or the Democrats can put literally anybody up for nominee, anybody, maybe it sways the vote. I don't know. There's enough of a camp out there of a non-Trump vote that if anybody else can pop up, and I mean, I saw that Matthew McConaughey wants to run for office, and you know what? If he throws his name out there, if Tom Cruise wanted to run for president, if Tom Hanks wanted to run for president, if Dwayne Johnson wants to run for president, I don't care. I would vote for him. Like, it doesn't matter. I'm saying if there's any other alternative outside of two 80-year-olds, I'm good with choosing somebody else. I'm good with choosing 0 presidents right now. But the hard part is we don't have a party. We don't have a political system that allows independents or libertarians, the Green Party. Nobody freaking knows who the candidates are because they don't exist. It's Democrats versus Republicans. So unless you're on that type of platform, you have to come out of nowhere. So just throwing it out there, like there could be some random crap happening where this election year could be a circus like it already is, but who knows? But all I'm saying is I think the markets got a little excited about Trump for a second.
Yeah, it would be cool to see The Rock run for president, but I just don't think that's in the cards this year. I think it's going to be either Biden or Trump. I think it's just going to be one of those two. So I don't know.
Yeah.
Were you saying that as a way to like price something out, like in the markets, or like?
Well, I'm saying like what I'm saying is this week, what seemed to be very simple and very clear, like Trump's going to be president, Fed's going to cut rates. Okay. The market for a second thought that was, and I came into this week thinking it was clear. Like Monday, Tuesday at all-time highs, I'm ripping on the Russell. It's like, dude, this could be like the easiest year ever. And then what happens? U.S.-China trade war drama. It's like flashbacks to 2016 where it's like, you never know what's going to be said. You never know what's going to be tweeted. You never know what type of drama is going to happen every single day. And that's what a Trump presidency feels like. I don't remember, when you've got Wall Street making algorithms based on what a guy says because he moves the market every single day, it's a wild card. That's not the greatest environment to be in. Outside of, is it deregulation? Is it pro-corporate America? Sure, all these things could be beneficial. But if that policy is not swiftly put in and we go to a trade war with China, that's not good for any market. That's not good for the global economy. So I just think it was like, hang on a second. Let's assess. And so, one way to tell that this is not the smoothest thing ever is look at copper. Copper has been getting pummeled for making all-time highs. Copper is down, 18%. And I initially, when this started to turn, this was right at the 618 on the swing. I was actually pretty interested in getting long copper. I'm glad that I didn't, because we're right back to these lows again. So anyway, I mean, I like, if this is going to keep going lower here, Frank, then copper is, they always call it Dr. Copper is like this PhD in economics as a joke. But the reality is copper is a good barometer for the global economy. If copper is heading lower and sliding, we have some concerns. So
maybe that's because of China too. The fears that another trade war is going to come out.
Absolutely.
So that could be, I guess, what's hurting gold as well.
Sure. Yeah, I think this week, what was bubbling on the surface was geopolitical tensions. This week they came to the surface, just because the threat is there. Like if Trump is president, then we probably will have some adversarial relations with China. You've got Taiwan, you got China, you got us. What's the involvement? I mean, is it worthy of a war? Is it worthy of a conflict? I certainly hope not. I mean, it's 2024. I would like to think that, we're all on the same planet last time I checked, but countries do what countries do, and sometimes it sucks. So I don't know, man, but that out there is a geopolitical risk is now like alive and well, and I just think that if that builds up momentum, that could be one thing that does certainly burst the bubble of what we've seen here with these runs. So good global economy would be China-U.S. relations are okay. I think I've said this for a while. Optically, China needs us. We need them. We pretend like we don't, but everything we buy is made from China, right? For the most part. The U.S. is not going to all of a sudden become this awesome manufacturing hub. There's no way. We've done it for too long. We import everything. We buy everything. Why? Because it's cheaper labor, cheaper products, and companies get ridiculous margins because of it. So they're the manufacturer, producer. We're the consumer. And if they want to be number one and we want to be number one, it's going to be the same thing. It's just it's frenemies, right? Like we have to be frenemies with China, and that's always the optics. So anyway, it was a bit of a I mean, it was a stick in the wheel this week when all of a sudden it's like, why didn't the market just keep ripping all-time highs? I mean, the drama was U.S. and China, and it was enough so that it grabbed the market in a big way. I mean, we're down 5+% in the Nasdaq. We're down 2+% in the S&P. You haven't seen it. I mean, we haven't seen a 2% pullback since April, and that only lasted to about 6%. And that was because we had inflation worries and we had the Fed that wasn't going to cut rates and be super hawkish. All that's changed. Right now, the Fed's dovish. Corporate earnings have been solid, but going into these next, maybe 30 days, earnings are still going to be important. I would like to take a look and see next week. Do we have any notable earnings for next week? Earnings calendar. I need to find like a better earnings calendar. Let's go.
There's a better website for that. Search up.
What do you?
I think it's Kiplinger.
Yeah, let's go this.
Yeah, just do Kiplinger earnings.
Okay.
And then I'll give you although it only gives you this week's, so I just realized that.
Well, that's
you would
not
have to
what I
look it up on like Sunday.
All right,
or
let me
Monday.
go earnings. Whisper.com. Yeah, I always get a stock twits on Sunday. Let's go to earnings whisper, see if this pops up. Tesla, Bob. Yeah, we'll take a look at Tesla. Mr. Beast might run when he's old enough. Okay. I mean, I
that would
like
be
I said,
an expensive presidency.
Well, how many giveaways would he have as president? He's like, look, if you can sit here and you can, you can, who can stand in the skywalk of the Grand Canyon for, a straight week, and whoever does, I'll give you $1 million. Like, is that what we're going to do for president? Is this, if you've seen the movie Idiocy, or is it Idiocy or Idiocracy? I think it's Idiocracy. I don't know, man. We're not that far away. We're not that far away. All right,
he would make it a challenge to see who can become president first among all the YouTubers.
Yep. What influencer is going to be president? All right, earnings whispers. Looking at the calendar for next week.
First person to president gets $1 million.
Oh boy.
All
right.
So we want to look at Tesla then, because they're on Wednesday or Tuesday. Okay.
Calendar charts Friday, Monday. Okay, so we're looking at the 22nd. So from what I see here, we have so next week we're starting to get up there with just over 100 stocks. So we have 40 companies on Monday, 80 on Tuesday, 140 or so on Wednesday, 170 on Thursday. That's a pretty good chunk of earnings next week. I wish this one did a better job just showing the notables. What are you seeing for earnings? Any Mag 7s next week, Frank, that you can see?
No, I'm not even looking.
All right. I mean, I guess it's going to be easier to find them next week. So, all right, let's look at Tesla.
Yeah.
All right, let's just go Mag
pretty
7
quickly.
What's that?
We're gonna have to do Tesla kind of fast.
Okay, let's do Tesla. Tesla's earnings. So let me just take a quick peek here. Apple earnings out to August. Okay. Let me just take a quick peek at the Mag 7. Amazon earnings out to August. Google earnings next week. So Google has earnings next week. Meta is out to the end of the month. Microsoft is out to the end of the month. Netflix, we had earnings and it's back and forth and it's mixed. Nvidia earnings all the way out to late August. Tesla's
going to move for sure, but
it'll move. And dude, this is a perfect one for me to just credit spread all day long. It's too volatile. It's too expensive. I'm not gonna, I'm not doing a long option on Tesla. But if we hit the expected moves, great. Realistically, I mean, I would like to position for something in the money. If Tesla dips, I'd probably still be interested in just buying. I mean, I don't mind taking a core position on Tesla. I have ratio spreads on Tesla. I've got naked puts on Tesla. Longer term, I'm certainly bullish on Tesla. But as just an earnings play, binary event. I mean, if we go up or down, I'm looking at drag some trades in here in the money. Credit spreads. Bull put spreads up here, bear call spreads down here. But if we dip, I will reestablish bull put spreads at those lows. So I think it's going to move. I hope it does, but I'm not going to pay a lot for it. So if we have earnings next week, which I see that we do on the 23rd, 23rd is going to be
Tuesday.
Okay, so I'm assuming it's going to be an aftermarket. So we have a weekly expected move of $23. If I look at option slam, let me log in here. Where's my option slam? Do we have Nick Phillips coming on at 10 o'clock?
Yeah, or 11. Yeah.
Okay, that's what I meant. 11. Sorry. Okay, so just let me do a quick price out.
We should come up with a list and then just price them out on Monday.
I agree. We can definitely do that. So let me just look at the expectations. We don't have to price it out today. We can do it on Monday. That'll be a good session for Monday. Okay. So I'm looking at the average move on Tesla is 12.61. We've had a lot of double digits there, 10 plus 11%. I would say conservatively, Frank, I'd probably go 11% instead of 12.61. Just because we have 10.6, 10.7, 10.5, 10.5, 10.96, 11 point. If I did 11, that'd be okay for the expected move. So roughly at 11%, we're at $243. So we're looking at about a 26% move, or $26 move rather, on Tesla. Now, you and I both know that that's what's expected. We could have a gangbuster move up or down. We could have a big surprise up or down. I don't know. I was surprised to see that the Tesla truck was outselling in units the Ford F-150 and some other truck, which is ridiculous given the price point. But I also saw that is it in Dubai that they actually put in their police fleet as Cybertrucks. So to me, that's crazy, dude. Anyway, that's kind of cool. I see them all over the place here. I don't know if you guys see them in Atlanta, but they're all over the place out here, which is kind of annoying. So
yeah.
Okay, so we can
a tank drive past you in the morning.
Pretty much. I mean, if there was a cannon on there, you couldn't tell the difference. Honestly. What and by the way, I don't, maybe I'm missing something here, but what is there's a sloped roof joke going around. Is it something? Am I missing something here? A sloped roof with like an assassination attempt, a sloped roof because Biden can't walk upstairs? Like, I don't get it. I don't know what sloped roof means.
I haven't heard anything about that.
All right. I just want to make sure it wasn't some Hawk Tua thing that I missed. All right, let's go for today. Nick Phillips coming on, carrying the show. Frank, have a great Friday, dude. I'll see you next week.
You too.
All right, get those arms and knees better.
Thank you.
All right, see you, dude.
Bye.
Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning. Good morning. Happy Friday, everybody. Just going over a few things here this morning myself with Fed's William speaking this morning. Nothing really of note out of him. Some of the things he did say is the Fed remains committed to achieving the 2% inflation target. Of course, price stability is key to financial stability. Longer run trends affecting R star are still in place. Prior to this, he had said that the latest data getting us closer to a disinflationary trend. That the latest data is getting us closer to a disinflationary trend that the Feds are looking for. But he would like to see more data to gain further confidence inflation is moving sustainably to 2%. And if you're sick of the Fed speak, Fed blackout starts tonight and goes until the FOMC meeting on the 31st/1st, I believe, or it's the 30th. Not sure how July ends here. Let's see. 31st. Okay. So 31st first is when the FOMC meeting starts. And so until then, we will be not hearing from any more Fed speakers after today. All right. Let's see. Let's go take a look real quick at that. Actually, we can use possibly EDGEFINDER Pro. This is sort of my my biggest gripe right now with the Fed is we haven't had any sort of indication from them quantitatively as to what they're looking for. They haven't told us. I mean, it'd be nice if maybe they said 2 quarters of CPI inflation data to give us confidence, or another. We've had 1 full quarter of it. Now we need to see at least another 2 or 3 prints of good inflation data. We've had this coming down of inflation data since March. Now, granted, up until this most recent print in June this most recent print of the June CPI, we were on this downtrend, but higher averagely than we had been since November of 2023. So coming down, the question for me is, how long of a disinflationary trend is long enough? And we haven't gotten that answer out of anybody at the Fed level. So hopefully 1 or 2 more prints and we can definitely secure a rate cut. Happy Friday. Have a great Friday, guys. All right, let's take a look at the Doxy. So still on this bit of a pullback here, have not created any new highs yet on the 4-hour and below. This is my ideal area to be looking for sell positions. Hopefully we could get something where we hang out here until next week's PMIs, and then the PMI catalyst, if it comes out on a as a miss, we go ahead and drop out of this zone, utilizing that as a catalyst. That would be my ideal scenario for next week with the Doxy. So translating that into something like a pair here, let's go to pound. Of course, not taking any of the pounds data into account here. It would be nice with the pound as well if we could get, ideally, again, hang out in this area, and then PMIs are on Wednesday. So pound PMI gives us a reason for the pound to go up, and then USD PMI gives us another reason for the pound to go up. That would be ideal. All right, let's take a look at gold. Getting some rejection here on the weekly time frame from these all-time highs. go ahead and mark this area up. Daily tried to push back, failed. I'm interested to see if this bit of price action ends up being a little bit more of a bull trap than maybe this initial try to push higher was, where we do end up dropping back below this area of support. Again, if we're getting continued dollar weakness data, this could continue up from here, from this area. I don't see any reason why, unless we get significant significant strength out of the dollar. Inflation, for whatever reason, reads incredibly hot. PCE comes out incredibly warm. If PCE comes out incredibly warm next week, I could totally see us, falling out of this zone as soon as next Friday. So it really just depends on sort of the data, a bit data dependent on our gold outlook here. Data aside, this is a tough one. These are some of the levels that I previously mentioned looking for buying opportunities from. However, this is a pretty momentous move to the downside here. This is not a slow trek to the downside where support is still showing that it, is trying to push gold up. Now this is just we have one little attempt here, but it's a straight shot down. So definitely, I don't want to be involved in this because I'm not interested in trying to catch a falling knife, which currently that's what this is. Now, if this can hang out for a little bit, try the head and shoulders pattern, but ultimately fail, and then retest, this could be a good area to try to catch it from, because price will have shown you that it was a falling knife in this scenario. It hit support, wasn't able to push back. It's no longer a falling knife when it's stalled out. And then it pushes up beyond some of these arbitrary levels that it creates here, creating this head and shoulders pattern, fails the head and shoulders pattern, retests the head and shoulders pattern, shows us some signs of strength from somewhere in this area, retesting previous resistance as new support, and then continues to the upside. That would be my ideal scenario if I was going to get involved in buys on gold. Now, if you're going to look for sells, again, you want the fundamentals to line up, which right now they don't really. Casperio asked if I could take a look at Euro JPY. Yes, I will take a look at Euro JPY as soon as I am done looking at gold. I'm going to move this up here to my watch list. All right, so on the opposite side, for the gold bears, this is not a bad area to start looking for selling opportunities either. You have this new leg to the downside. You have this bit of price action consolidation here that ultimately could end up contributing to a bit of a head shoulder situation. We'll go circle. We have shoulder here. Head here. We can form a shoulder here with some decent signs of rejection. Boom. And then you would target these next levels. And again, you would have another sort of head and shoulders potential scenario playing out. I'll show you the shoulder, head. This entire area becomes the new head. And then you would look for another shoulder over here. So that would look like price falling to this area, popping back up, creating a shoulder. That's if you're looking for gold sells, which for me, I'm not willing to really buy it per se from this area. I want to see what happens. I want to see something similar happen to what I was describing before. But I don't know. I'm not willing to bet against this this gold strength market. Not at all. All right, Euro JPY. Let's see. Let's just do a little bit of top down. Major weekly level there. Major psychological level at 175. Okay, so all right, so we're at a pretty decent area of support. Prices created this trend to the upside, and on this current pullback, we're at previous highs. What was our previous ceiling? So now the market is testing this area as new support. Is it going to hold up? It's tough to say. The 4-hour price action doesn't look great for it. For me to want to get involved on the buy side of this, I would want to see something like this. You guys are going to come to know my favorite chart pattern here pretty quickly. Shoulder, head, shoulder, inverted head and shoulders to the upside. That would make me feel comfortable. Now, if you're looking to scalp Euro JPY, the Euro is interesting. Let's see. I have an article pulled up on it somewhere here. I believe I did. Let me look. Euro. Wait and see. ECB boost rates. Reuters. Okay. So let's see what Reuters is saying about the euro. So the ECB held rates steady after the June cut. Euro sticks near 4-month highs versus the dollar. Of course, we're talking about the yen, but regardless, the euro strength is what is obviously keeping EJ high. Let's see this. Give me a second. Traders on Thursday kept the euro on course for a strong comeback as prospects for the European Central Bank turning cautious after an expected second rate cut in September swept anxiety about French politics out of the currency's path. So they have said that the this was very interesting. Where is it at? Right here. Extreme scenarios around French political risk are abating, and markets are convinced the Fed will be cutting rates soon, and we've started to see softness for the dollar against most currencies. So this second part aside, talking about the dollar, this part right here, extreme scenarios around French political risk are abating. So all of the things that were pulling the euro down for the last like almost month, I guess, couple weeks, they're starting to fizzle out. They're starting to the fears and concerns about the election are starting to no longer be a factor for the market. So everything that we've been seeing in this area starting to chill out. So that's less of a derogatory look towards the euro. So less reason for the euro to continue south. The euro, give me 1 second. There was a bit here about Lagarde. Oh, yes. Okay. It's up here. So this is some concern for the euro. If I can find out where it's at right here. Okay. So investors warned that the euro was not a straight bet should Donald Trump win the U.S. presidential elections in November. Trump has proposed import tariffs that could hurt the eurozone economy, revive U.S. inflation, and send U.S. rates and the dollar higher. So these tariffs could hurt the eurozone economy. These proposed tariffs. The markets see a Trump victory as dollar bullish. So until the election, the depreciation will be limited. So the idea here for me is that the euro is tricky to gauge right now. Fundamentally it's tricky to gauge where the euro is at. They just kicked the can down the road with this last meeting. Now, against the yen, I think the yen is just absolutely trash fundamentally still. It's one of the strongest currencies today, and I believe for the entire week it's been one of the strongest currencies. But their intervention methods really have not, at this point, I don't think they've taken root too much. I could be wrong. I mean, this is a decent little push up here for the yen. We could be starting to see some of that real yen strength, but on a much larger time frame, we need to see significant strengthening out of the yen. If we get strong yen, continued strong yen, and the market is pricing in some of those tariff problems for the Eurozone, we may see continued fall off here from Euro JPY. That would be my estimation for this is that we want to see continued sell-offs. It's just a matter of, is it going to sell off from this area, or is it going to come back farther into this bit of price action here where we've created this high, low, lower high, lower low? Are we going to come back in higher than where we're at right now and create another lower high before falling to the downside some more? I could see that being the case, at least against the yen. Do I think there's a chance of gold hitting 2,500? Absolutely. I think the Trump tariffs are kind of throwing me when it comes to dollar. I can see Trump's economics proposals being problematic for the market's rate cut bets. And so if Trump sends the dollar soaring off the back of economic policies that end up reviving inflation and forcing the Fed to act with monetary policy in a more hawkish approach, I can see gold completely dropping out of the sky. Absolutely. Now, if the markets, I can't see the markets not caring about that, but let's just say the markets don't care about that. And one of two things: the markets don't care about that. They care more about the fact that we're getting rate cuts, and hopefully we begin a rate cut cycle going into next year. Who knows? Then the dollar would fall off and gold would continue up. The other thing I could see gold continuing up and hitting 2,500 off of would be further escalations. We're not that far. We're only a week from when somebody tried to assassinate President Trump. It's been a relatively quiet week. For the most part, there have not been any further escalations in that regard. But if something else was to happen from any of the political parties in the country, if Democrats get upset and start rioting, or Republicans get upset and start rioting, there's violent attacks. There's, again, I'm not trying to fearmonger when I'm saying this stuff. It is something for me that has been a real kind of like my ear to the ground, paying attention to see if anything's going to happen beyond the assassination attempt. A week out, I think every day that passes, we can all kind of take a deep breath. But I can see if something happens, gold absolutely rallying to the upside, hitting 2,500 for sure. 2,500, absolutely, I can see that happening. And then that would also continue to drag equities to the downside. Which equities are starting to form a bit of a, if we break out below this, we've now shifted structure on the daily. A break below this low here of 19,750 area, 19,730, 19,700 area. A break and close below that would be a shift of structure here on the daily for the NASDAQ. Which again, this is somewhat, in my opinion, a little bit of Trump fear based on his proposed tariffs. I think so many people, from what I know, so many people have been anticipating Trump being a good thing for the stock market as a whole. But with the way that he's talking about these tariffs, it might not be the case. He might actually not be good for the stock market this time around. So, yeah. Other than that, I'm not looking at anything today. I'm not getting involved in anything. There was a bit of a CAD trade that I took earlier, just off of continued CAD weakness from their retail sales print this morning. I got in on the smallest of trades right in here as we tapped into these highs. I took this little leg down here and closed out at the bottom of the support, because this is sort of my favorite chart pattern. A little bit shoulder, head, shoulder to the upside. If I had a reason to buy gold or the CAD up, I probably would have gotten involved in this around here to take to the upside. But I didn't have a reason to do that, so I just sold off at this resistance and got out real quick. But that's the only thing that I took today. It's the only thing I'm really looking to take. If you guys have been watching my segment here for a little while, you'll know that I mostly trade currencies. So, I pay attention to all this other stuff. I pay attention to gold. I pay attention to NASDAQ, but I tend to trade currencies around red folder events and the follow through of red folder events. All right, guys. If you guys have any other questions, go ahead and hit me in the chat real quick. If not, we are going to go ahead and call it. So I'll give you guys about 30 seconds to drop anything in the chat that you have. All right. I'm not seeing anything in the chat. You guys be safe. Trade smart from all of us. Oh, did I do all JPY? I did not look at all JPY, but I can. Let's see, top down. Big pullback out of the odd here on the weekly. I believe that's due to the JPY strength. Let's check the odd real quick. Odd weakness out of nowhere. For what reason? Not really sure. Odds had a pretty weak week this week. And I'm not sure why, to be honest. But let's go back to odd JPY. So you're coming down into this support area here. If it's me, this is a lot of momentum to the downside. I'm not looking to get involved in this, but if you're trading this on the 4 hour or something, I think there's still room for a price to push down into this area, potentially from here. If it's rejecting from this area and continuing down, I think you could see it pull down into that zone. Now, the way that I would maybe handle this, if I had a reason to get involved in this, which I don't, but on a technical standpoint, you could handle it a couple ways. I would trying to say this without, again, I don't have, this is not financial advice, investment advice, but if I was looking to get involved in this trade to the downside, I would be selling it off in this leg here. And then I wouldn't tolerate much bullish movement back up into these highs. This is obviously a level of resistance here, but I like this shoulder, head, shoulder pattern playing out. If you were to get involved here, I mean, theoretically, the best option would be to wait for price to maybe pull back up towards this area again. Get in here. Stops. I mean, it just depends on really what your aim is and what your risk is. I know that there's a case for stops outside of resistance. I'm not opposed to that. For me, if price comes like this far back into this area, I'm pretty sure it's going to at least tap into this resistance. So I'd rather cut my losses at this level, risk, let's say 0.5%, and be aiming for first these bottoms, this target here, taking profit there, and then leaving runners to go to this next area here. And then again, if you get tagged out at this stop loss, if price is going to do a triple top scenario where it hits here and rejects again, well, then here's another entry opportunity after you get confirmations on lower time frame price action. So if price comes back into this zone and gives you some kind of like a double top neckline break like it did here at a third area, 1, 2, 3 top, you get in again, make sure you're risking properly per trade. And the idea would be to sell it from the highs once you get the proper lower time frame price action. And then you can target, because you're going in on these lower time frames, you can set your stops a little bit shallower, and then you can target 1 level, 2 levels, and then your third level down here. You have 3 different targets you can aim for. That's how I would handle odd JPY if I was to be trading it from where it's at right now. Again, I don't have a reason to be trading it. Do I think silver will go higher after this huge sell-off? Let's see. I actually don't even know if I have silver on my list. I do. Okay, let's see here. I'm not going to lie to you. I don't know a ton about silver. So this is going to come from a strictly technical standpoint here. I'm not considering any fundamentals when I give this analysis. Do you think silver will go higher after this huge sell-off? I'm assuming you're talking about the sell-off that we've been seeing over the last week. So these are the potential moves that I see happening out of silver from here. Let's mark this up. basic market structure 101 tells us what? Tells us that we have an uptrend here, higher high, higher low, higher high. We're creating a higher low right now. Okay, so the question is now, where is this low gonna stop? Well, theoretically, in order to maintain the uptrend on the daily, we need this higher low to stop at least above 2600. So it could bounce higher from this area of support right here around 29. You also have this level here and this level of support here before you hit the 26. So you've got 27, 28, and 29 basically as major levels of support for price. If you get some decent rejections out of this, I think you could see some continued upside. Now, how far? That is the next tricky question, because for me, something I could see happening with this would be taps into here, taps back into here, taps into here. Oh, too much. Taps into support, boom, hits resistance, taps into support, boom, hits resistance. And this tap into support, I mean, at this point, this is where it could divert and come all the way back down, then go back up or push up from here. In order to make new highs out of this area, I think we're definitely going to want to see this channel broken out of. We're going to want to see these areas of resistance broken out of with strength. But I wouldn't discount the uptrend on the higher time frames. I just would not blindly purchase in this area simply because we're out of support. I would wait for more price action confirmations here. And then, of course, me not having much understanding of, or not understanding, but awareness right now of what's going on fundamentally for silver. I can't bake in a fundamental bias for you, unfortunately. All right, guys. I haven't seen any other questions come through, so I'm going to go ahead and call it. I hope you guys have a great Friday, and I will see you all next week.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.